What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you always. I am the bearded boy wonder, Dave Bartosiak. And today, my friends, is a happy day. Why is it a happy day? I don't know. It's Thursday, and I decided to be happy. Whenever I get past Wednesday, I don't know about you guys, but hump day for me is terrible. I have so much stuff I have to do on Wednesdays. It's insane. So I'm always happy to get past Wednesday. Thursday is always a breeze, and a breeze. It's always a lot easier on Thursday, and then Friday, and then there we go. Then it's the weekend again. So we're gonna do this a little differently today. First, I got my chat up here, guys. So hello, everybody. I see you coming in. Kurt, Norman, Danny, Bruno, Daniel. What's up, guys? Welcome. Remember, there's like a 30-second delay between when I say stuff and you guys actually see it. So there's that. But my chat window, I think you get it right away. So what I want to do here is take a live look in at a couple of these things. Now, remember, this is the software that I have that loves to crash. So if it crashes, I'm just going to cry, and then I'm going to try to load it up again. But I like having this at least because this is real-time stuff coming in. I suppose I could do E-Trade Pro and load that up for you. That's a little bit of a process, though, and I didn't think of it. So maybe next time I'll get the E-Trade Pro going. I probably can hide my account info or whatever. That's not really my thing there anyway. Qualcomm. Let's just start right away with Qualcomm. What happened, guys? I thought your report was so good. I thought everything was going to be great. Nope. I don't think so. Up in the after hours, guys, this is why I tell you, don't ever freak out about what happens in after hours. Never. Never, never, never. And every once in a while, I get a snide email, not from you guys, but from I've gotten from other people like, oh, looks like Qualcomm was wrong, blah. And then they immediately start talking garbage. And I just go, bro, why don't you just wait until the market actually opens before you start gloating? Because how many times have we seen this happen? Okay? Where it's up in the after hours, everybody thinks it's going to be all rosy and everything's going to be fantastic. And then what happens? Inevitably, the market opens and they take this thing to behind the woodshed and just pummel it. And that's exactly what's happening here with Qualcomm. They are relentless. They are pounding Qualcomm in the face right now. Now, that's not to say that it doesn't rally back up throughout the course of the day, right? It's trying to carve out, find a bottom here. What I'll do sometimes with these trades, just so you guys know, so we can ignore Qualcomm right now. Cross your fingers. Let's hope this options chain doesn't blow up on us. Requesting data, and come on! There we go. It's a good thing we're streaming in 1080p so you guys can see all these little numbers we got going on here. Now, I did my good, the bad, the ugly review. See, this is how I put it together. And I know lately I've been giving out a lot of trades, right? Not just like one. Although yesterday, did we only do one? I can't remember. I just can't remember. But I know in the premium sessions I gave, on like Morgan Stanley, I gave several different options and ways that we could get out of that one, right? I didn't put the Morgan Stanley one in here. Oh, God. I'll fix that. I'll fix everything. Anyway, so 52.50, 50 put spread, 81 cent net debit. Is that what we're talking about? April 21st. So here we are, April 21st. 52.50s are 118 by 126, basically 121. And the 50s are 18, right? So basically this is trading over $1 right now. So let's just kind of see what happens, shall we? Let's see what happens here over the course of the trading day. Really keep an eye on shares of Qualcomm. Looks like, 51. They got down to 51.40 already. So let's see. Dong, doing some butterflies, huh? Nice. Butterfly doubled. Glad to see that. So let's just wait. Let's just let this thing evaporate. Really, let's see what happens. You know, one thing you can do if you want, right? You could go ahead and cover the 50 that you're short because it's only like 10 cents, and then let the 52.50 put run. Okay. The only risk that you run here is that it doesn't ever get to 52.10, right? Because now you're looking, that's kind of, or 50.10. That's kind of your break even on that now. But then if this, because if Qualcomm really breaks down, it gets down in the 40s or whatever, this is like the best that you're going to get. It's going to limit, this will limit your 52.50 put to 250, right? Which is the difference in the strike prices. So you can do that. You don't have to. Most of the time, I just kind of leave this guy there because I don't want to pay the transaction cost of closing out this 50. Plus, I pretty much know for the most part, you know, oh, Mr. Wallace covered the 50, put it 4 cents. That's what I'm talking about. That's what I'm talking about. If you can get a move like that, then that's great. Back to Qualcomm. So what I'll do on this stock like this sometimes is I'll watch this throughout the course of the day, wait for it to bounce a little bit, and then when it looks like the selling pressure's ended and it's taken a turn, I'll go out and I'll buy the call and try and make some money on a little bit of a retrace. I'll roll the dice that way, okay? Because sometimes it pans out great. Those are very high-risk trades, though. I don't put out a lot in order to put those on, but it's a very high-risk situation. Okay. That's all right, Kurt. We can get greedy. We're trading. We can get greedy. It's fine. But yeah, in these cases, I'll literally like go out. I'll wait for these kind of further out calls to sort of erase, you know, some of this, and then I'll try and scoop them up at the end of the day for just like pennies on the dollar in the hopes that overnight something happens and they rally a little bit. I'll do that sometimes, especially if I'm betting against it. So if you got the 52-50-50 put spread, you're going to make money on the way down, and I'll wait till the end of the day, and then I'll roll the dice on one of these that are very cheap. You know, I'm talking 10 cents, and I'll buy like, you know, 20 of them or whatever just to roll the dice, a couple $100, whatever. I'll do that on occasion. Sometimes I've had it pan out where like I'll literally, they'll skyrocket the next day, and I'll end up making a ton of money. But it's rare that it happens, right? I would say 1 out of every maybe 5 times it happens. But when it does happen, it's spectacular. Anyway, so there's Qualcomm. So what do we call this now? We're going to call this... What, do I even need to do this PowerPoint officially? I think I do, just for my own records here. So right now at 52.50... 52.50, the spread's trading $1, right? Spread's trading $1, and we're just going to wait and see, okay? So that's what we're going to do with Qualcomm. All right. Now the Morgan Stanley, I can't believe I wrote this whole thing out and then I just deleted it. So on Morgan Stanley, we had a Condor. I gave a bunch. A bunch of different options, but the Condor that I think I officially put on was, because I gave you 2 of them, right? I gave a less aggressive Condor and a more aggressive Condor. Less aggressive was the 42.50 and the 39.50 So obviously it worked on this end, so you don't have to worry about that. But if you did this, I say you just take it easy also, and let's just wait to see what happens. Now, the net credit on that, I think, was 14 cents. So you could even close it out now if you're nervous. I don't think you need to be, though. Let's look at Morgan Stanley right now. Look at this thing chopping around like crazy. Let's go out to just the last couple of days. Big jump up on earnings. Started to give it back a little bit. Jump up, giving it back. Let's see if this retests yesterday's lows, which I'm sure it will. See how it reacts to yesterday's lows. But for the most part, I think it's telling us it's going to have a hard time getting up over and rallying much more. Nice move there, though, for Morgan Stanley. So there's that. All right. And then... So I got all my stuff up here, right? So Pier 1. So Pier 1 went with the April 21st 7-8 call spread for a 43-cent net debit. Pier 1's at 7. So it's not really giving us much love. Back to the options chain. Hey, there it is. Now it crashes. Thank you, Active Tick, you bums. Man, let me tell you, this thing, if it wasn't $20 a month, I would never use this program. Good news is I got this. Plus, I got my E-Trade Pro. I don't know why I just don't use E-Trade Pro and stop paying for that stupid thing. Okay. Options chain on Pier 1. April 21st, 7-8 call spread. April 21st, 7-8. It's going for 15 cents. So we're down on this one. Obviously, with Pier 1 where it is. So these guys reacted. I'm going to pull up free stock charts now because these guys at least would give me. They're not going to crash. And we can have a quick little look in. Oh, yen is giving up ground a little bit. That's good. Little risk off happening. Okay, Pier 1. Look, it's still got my nice little fibs in here. Look at that. Last week, the dip down, found support there, ticking higher a little bit. Up 2%. Yeah, not too much going on here. What do we got to lose at this point? I'll define it. 15 cents, right? Didn't work out. If you guys are still in Pier 1, I just say you rip it. 15 cents with Pier at 7. This is one I think you just abort the mission. Just take your 15. Take 15 cents if you can, okay? Take it and run. Ugh, you know what? As I was looking through this, it's a little bit disappointing. Like, we had a disappointing couple of weeks here. Nothing super fantastic. And, yeah. What the heck? I'm looking back on this. There's a lot of these slides that I did that I can't find in here. I must have accidentally deleted something. My Netflix slide isn't in here either, and I know I had a Netflix slide. Right? Oh. Okay, guys. You guys are catching me slipping this morning. Let's look at Netflix. So, I was bearish on Netflix, and we did the 144, 140 put spread on Netflix. And that's looking okay right now. The 144, 140 put spread on Netflix is looking all right. FLX. With Netflix selling off a little bit, they're up a little bit today. Look, they defended that 140 level, didn't they? Ugh, those bums. But 144s are 415. The 140s are $1, so that's 315. So we could rip that one. We could definitely rip that. If we're holding the Netflix, if you're holding the Netflix, go ahead and rip that trade. Get your 315. There's no reason to sit around and wait for more. We paid $197 for the Netflix put spread. Okay. So we paid $197. You're going to get back $315. I call that a victory, okay? Not a fantastic victory, but a victory nonetheless. Let's not mess around with it. We only got 1 day till expiration. If you really want to, you can stick around. But, you know, that's pretty good, I think, what you're getting there for Netflix, given where the stock is at. Okay, so that's Netflix, Morgan Stanley, Fastenal. And guys, throw out whichever ones, whatever you want me to talk about, whatever trade you want me to talk about. I'm talking about, folks. All right. Oh yeah, we did. I threw out the credit one too, right? A credit bear spread, and Ron Jeet made some money on that one too. Good. Okay. So Fastenal, right? So Fastenal, I got this another iron condor we were talking about. 52, 50, 55, 49, 47. This one's not working out. Because Fastenal just decided it didn't want to be a company anymore and just broke down, right? So this is what happens with Fastenal. You let the call side, that call credit spread, the top side, is going to expire worthless, so that's good. But you're going to have to try and cover over here. You got to try and just cover this put spread. You're going to lose money on it. You're in the red. It happens. Let's see how bad it is. It's going to be close to $2, right? Because that's the worst side. So what was it? 49, 47, 49, 49, 47. You see this? It's almost $2. So basically anything under $2 that you can get. If you can close it out for $1.99, you close it out for $1.99, okay? So $1.95, maybe you'll get filled, maybe if they want to be nice. But if you have to end up doing two, you got to take two, because otherwise there's a whole mess of stuff that happens here, right? Because otherwise they'll try to sign you on the 49, and then you have to exercise the 47, and it's just a pain. So just try and rip it if you can, okay? Just rip it, $2. Yes, it's a loss, but it is what it is, okay? That's Fastenal. Unfortunately, that's Fastenal. Bed Bath & Beyond. You guys got to still be holding Bed Bath & Beyond. I've got CarMax on this list too, Kurt. I'll get to that. Bed Bath & Beyond. So this was a bearish put spread, the 39, 37, 50. And Bed Bath & Beyond started to come down a little bit, started to get into this gap. Remember this gap we were talking about? Saying gaps get filled. I was so excited. And look, up until, really yesterday it was a rally. And then today it followed through a little bit. So, just a little snake bit here. Anyway, bear put spread, 39, 37, 50. So 39s are only 11 cents. 37.50. This is just because there's virtually no bid. There's basically no bid for that one. Basically no bid. So 11 cents here. So if you can get your dime, I guess, you take your dime. You got to just take the dime. Frustrating that they just never came down to fill that. They never came down to fill it. CarMax. KMX. So another case where it came down, and then yesterday, all of a sudden, this guy decided to be a superhero too. For no reason. Bounces off the lows and goes higher. Right? So this is the good thing with CarMax. We had a bullish put spread on CarMax. We were short the April 21st 55, 52, 50 put spread for a 105 net credit, right? Max profit with CarMax over 55. So it's good that these guys caught a bid out of nowhere. Now we look at the put spread on CarMax, and the 55s are 5 cents. So all that has to happen here, guys, is CarMax has to stay above 55, and you don't have to do anything, okay? You don't have to do a single thing. You just hold on to it, and that whole $1.05 net credit is going to be yours. So that's a very positive thing. That's a big plus here. So CarMax worked perfectly. So that's good. And then again, remember, guys, we had the Acuity. The Acuity trade, that one we don't have to do anything with because they just dumped and then they never came back. So that's good. And I know a lot of you guys bought the Lotto, the 185 put, so everybody was very happy with that. So that's good. And then look who decided to just twist a wrench into us. BlackBerry just twisted the wrench. You know what happened here? So we're kind of moving along. I'm like, okay, hey, they're coming back. We've got a shot at this condor, right? Because it was the $7.50, $8 call spread. And we were right at $7.50. And I was like, all right, sweet. Then they get awarded like $1 bazillion. So that stinks. So this is something that doesn't happen often. And there's no way of calculating this in any analysis that you do. So when it happens, it's frustrating, but it is what it is. So again, if you did have a condor on this, what you're going to have to do is you let the put side expire worthless, but you got to close the call for whatever you can. Okay, so whatever you can, whatever you can do there. All right. So there's that with BlackBerry. And what else do I have on here? I don't have anything, right? I got nothing. And then today, yes, we do have Skechers today. When am I doing that? 10 o'clock? 11 o'clock? It's not 10 o'clock, is it? It's not immediately following this. I wouldn't do that to myself, did I? Is it 10 o'clock or 11 o'clock? I think it's at 11 o'clock, right? What did I send in the emails? Does anybody remember? I'm sure I could check. I'll check later. Maybe I should check right now. Oh, man. When is that? That's so funny. I can't remember when I said I was going to do that. Hang on. Give me a second, guys. Let me look over here off the screen and find out exactly when we're going to do Skechers while I got everybody here, while I have you hostage. Skechers, 11 a.m. Okay, good. So Skechers at 11 a.m. 11 a.m. Central Time, everybody. That's when we're doing Skechers. Okay. All right. Good. All right, let's go ahead and just open it up for questions, I suppose. We'll take a look at markets. Lulu. Yeah, it just says later, 11 o'clock. It's 11 a.m. 11 a.m. for Skechers. It's 11 a.m. for Skechers today. Okay. All right, so Lulu's starting to get off the mat a little bit, which is good, right? Just in general, it's just good to see a stock start to bounce a little bit after a terrible earnings report. But we knew that was going to happen, right? This is pretty interesting. Look at this huge band of volume right here. That tells me that they're gonna creep on back. 55 might happen today. I mean, that's not far off when the stock's at 53.26 and it's higher beta like this. But look at this huge chunk of volume here, and then you have a big chunk of volume at 57s. So I think that's even more likely to get, right? That's right. And then tomorrow we're going to do Rambus. Let's take a look at this market for a little bit. Now, I don't know if you guys have been watching the Dave's Daily Dive videos at all. I'm trying to make those more useful. They're actually not really, I'm not doing those exclusively for, Live Trader. That's something that goes out to the world. But I'm kind of using it as a way to promote what we're doing here at Live Trader. But I'm just kind of covering some key levels in markets that I'm concerned with and give you guys some broad strokes, some big parameters on what to look for in the market. So one thing that's intriguing here with regards to the S&P 500 is that we've seen strength at the 200-day, and it happened here in June, happened again before the election, and now we've got a long way to go until the 200-day here, with the 200-day all the way down to 2232. Okay, so a big wave, big move from here is what it would take. But what should be a little bit concerning is that the market is below the 50-day moving average, right? So you don't really want to see that, because when the market dives below the 50-day and it's above the 200-day, it has a tendency to get to the 200-day. Now, that didn't happen, here until some weakness really pulled it down. But it did happen here. September kind of lingered and then dropped lower, found strength and went. So we could be in one of these cycles here. And if you were pulling up a MACD right now, moving average convergence divergence, there'd probably be a MACD sell coming very soon here. Okay. So we are looking at this as a little bit of a concern because there's some general risk-off behavior that's been happening in the market. Part of that, look at the VIX. So we had a little bit of a spike in volatility here, okay, with the VIX creeping up a little bit. Last couple of days sold off, but still, that's risk-off behavior. And again, the yen, this is certainly is risk-off behavior. But look, it found support at the 61.8% retracement of the November to December move. Currencies love fibs. They love them. So I think a retest of 110 for sure. I'd be more comfortable it came up to 112 and ran out of gas. But I think it does. I think it stalls out here, which would also be awfully close to that 200-day. So they bring the yen back up, or back down rather. So this is dollar yen, okay? So when this is moving up, that means that the dollar is rallying. So I think this rallies up to 200-day and then lets loose. Almost a perfect scenario because the commodity channel index would go to the zero line and then evaporate. And we've seen that happen on several occasions. Look at this. Up to the zero line, out of gas, at a fib, also lights out, okay? So I think this is setting up itself to do this one more time. All right, so I'm going here on gold. Let's look at gold a little bit. Now, actually, okay. I'm going to take these off. And I was just talking about the yen, right? So keep that in your mind. And I'm going to do a comparison here to the yen. Let that marinate for a little bit, folks. So the bars here are gold. The line is dollar yen. And it doesn't matter how far I go out. So when somebody's asking you or tells you that gold is an inflationary hedge, they don't know what inflation means. Or they don't know what a hedge is. Don't let them say that. And don't think that, please. Because it's not. It's not at all. Okay? The way you have to look at gold is it is a world currency. It's a separate currency altogether that does not pay a yield at all. Okay? So it's a currency with no yield. So when people say it's like the fiat currency alternative, that is correct. And I don't know of any other way to prove this other than just look at gold versus the yen. And you'll see it. Now, the yen is a risk-off currency. Okay? So then people will say that gold is a fear gauge. And that's closer to what it is, but still not really correct. Right? Risk-off and fear, in my opinion, are not the same thing. All right? Because fear is more extreme. Like fear is like a panic. Fear is people freaking out, right? When I think freak out, I think the VIX. Because that's a much more accurate comparison, I think. Because the VIX measures the expected range of the S&P 500 in the short term. And they do that by using options premiums on S&P 500 futures contracts, okay? So that's more of a fear gauge because you're like, I don't know what's going to happen. It could go here, it could go there, here. So then the expected range on the S&P 500 is going to increase. So that's much more accurately a fear gauge, the VIX. Whereas gold is really just this risk off. It's more tied to currency. Another thing I'm going to show you about gold is the 10-year. And doing this on the same chart I don't think is going to work. So let's get rid of the yen. Gold and the 10-year. Now, gold moves around a lot more than the 10-year does, or the 10-year rather moves a lot. But you will notice directionally they move in opposite directions, right? So percentage-wise, the move may not be as extreme. Can I do logarithmic? That's not going to change anything really. Okay. Anyway, but it's directionally. Directionally, rates move one way. Directionally, gold's going to move the opposite way. Okay? And again, this furthers my case that you should look at this as a currency that yields zero. Okay? So think of it this way. If, in currency terms, if the United States rates are going up, it's going to make the U.S. dollar more attractive, especially in terms of the carry trade. So sort of ceteris paribus, if we're not worried about geopolitical risks and what's happening in the U.S. and blah, 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 higher rates in the U.S. are going to make that currency more attractive compared to the currency that doesn't pay a rate, right? So this is what you see. All right, so that's what's happening with the gold market. So that's why I was like, I think you got to be a little bit bearish here on gold heading into this year because I thought that the 10-year was going to keep creeping up. Well, what's happened recently is that we've seen, let's get this comparison off. We've seen the 10-year tick down. Fed raises rates, 10-year goes from 2.6 to 2.17. Go figure, right? Rates bottomed out in July, rallied sharply into mid-December. Now, this mid-December was also the top of the Russell and some other things. So you have that double top, out of gas, breaks the lows here. But if you notice, there's still a nice, healthy trend line intact. I could call it there. I could tweak this to make it look better, right? Whatever. Or you could put it there. Whatever you want to put it. Wherever you want to put it. There's still a trend line, a strong trend line that's intact here for the 10-year. So even with these bottoms broken, this will sort of wedge itself in there, I think, and then we'll break one direction or the other, okay? So as long as the 10-year is dropping, that's going to be bullish for gold prices. Now, what's not so bullish for gold prices? Let's draw some fibs from lows here. Support here at the 38.2 fib. Breaks down below these. Breaks through the 50. Breaks through the 61.8. But found some support. This can't be the 76.4, could it? Let's see. Got to add your fib levels. 76.4. Oh, look at that. Spot on the 76.4. Incredible. And then went higher. So we're still playing off of this big fib. We're in this land. You got to be careful, though, now because it went to the 23.6, and gold's starting to stall out a little bit. So we could make another move, push down to 12.51 before it finds strength again. So gold's in kind of a tough spot. Okay, but really the question here was the divergence between gold and the gold miners. So let's go ahead and put up these gold miners. I guess I'll just use GDX. Unless you want me to use a different ticker, I think that's the best one. GDX. And, is there much divergence? You're saying junior miners, though. Okay, I can pull up junior miners. Junior miners might be different. GDXJ. I think junior miners just throw in another level of volatility, okay? And I'm going to do that. I'm going to put the GDX on here too so we can see. This is one of the cool parts about freestockcharts.com is that I can do all this stuff on the fly. This is a perfect example of beta, which is great. So the green is the gold miners. The orange is the junior gold miners. So pretty much what you see in the junior gold miners is it just exacerbates the move of the larger gold miners, right? So they go up more and they go down more. So that's just beta. That's just beta, okay? When I'm looking at this, I don't see huge divergence. Over the short run, you do kind of get this, right? So here's an area where gold is going sideways. This is in mid December. Gold's going sideways, and then the miners sell off, right? But then they come right back. Here's another time. Well, I'm trying to find places where gold is going sideways, just to point it out. So here you got outperformance by the miners. They're rallying higher when gold's not doing much, and then they creep down when gold comes down. So I think it's not really, it's temporary divergence is going to be my official stance, and you're going to have regression to the mean. So what I mean by that is, if gold rallies, then now the GDX and GDXJ are going to rally that much harder, okay? And if gold falls apart, I think maybe they'll be insulated a little bit because they're already down, right? So that's that. But you got to remember the GDX and GDXJ are kind of this, they're the love child of something that's going to follow gold, but they're still stocks. So they're still exposed to the overall risk in the stock market. So if it pushes one way or it pushes the other, it's going to have an impact on them. So if you get a huge rally in the Russell, I'm pretty sure most of those junior gold miners are on the Russell. Probably a lot of the major ones are too, that you're going to see that. Now, unfortunately, these bums don't give me a Russell, but I can use IWM. So you'll see, again, a little scenario where overall move higher in the Russell does kind of help these gold miners, and then when it goes lower, it kind of hurts the gold miners, right? But so if I was putting this together, and then look at this big dip here in gold again, that's that period, that mid-December period where gold was sideways and the Russell was sideways, and these guys decided to get out of hand, right? So, interesting. Very interesting stuff. So anyway, I think it's a little regression to the mean. I love looking at charts like this. You guys got me all excited, man. Cool stuff. Thanks for bringing that up, actually. Gives me an idea for, my other work I have to do. Let me write this down, actually, before I forget. Explaining divergence in the miners. Cool. Love it. I have to do a big report, actually, for Zach's on May 1st, and I was looking for an idea of what to do. Perfect. You just made my life so much easier. Thank you. Okay, so there's GDX versus GDXJ. Valero. Yes. Refiners. Yes. Okay, so for refiners, we're going to put some oil up here. And we're going to go with Valero. All right, now, I've got oil up here because this obviously has an impact on the refiners. Now, the way the refiners make money is through the crack spread, okay? Get your minds out of the gutter. That refers to when they crack a barrel of oil into the different products that you can get out of oil, right? So you buy the barrel for $50, and then from that you can get, whatever it is. Let's call it 25% of it goes to gasoline, and the other 25% goes to heating or whatever, jet fuel, and the other 25%, whatever it is, whatever it gets cracked down into, right? And there's actually a much more scientific, there's actually a detailed, like, crack spread equals this, that I'm not telling you guys correctly. So let me just get the crack spread up here. You get the definition here of the crack spread, because it's like RBOB, and then widely used crack spreads included 3-2-1. Okay, so the Gulf Coast 3-2-1, the Chicago 3-2-1. So that's sweet crude, the number of sweet crude that they get in, unleaded gasoline, and heating oil. Okay, yeah. So for every 3 contracts of crude, 2 contracts of RBOB, and 1 contract of heating oil futures. That's your crack spread. Okay, there you go. We learned something today. Yay. Anyway, so these all have an impact on the refiners. Okay. And you can see that, you know, they have a relationship with the price of oil, but it doesn't, this correlation isn't exactly perfect, right? There are times when oil totally goes down and this stays sideways before going down. So it's one of the inputs, right? And then you got this just getting torn apart while oil's rallying. But for the most part, cheaper oil is better for refiners, right? Because that's your main input price, input cost rather. So obviously, if your main input is getting cheaper, it's going to be better for you, right? We can get Zach's rankiness on this. Let's get some Zach's rankiness on this. Let's see what Zach's has to say. And I could totally pull up my other thing. My Zach's research system. But let's just do it this way. So we've got him as a 3. Do they have earnings coming up? They must have earnings coming up. Oh, what is, like, really? This is like you give your kid a crayon and a stock chart, and this is what they do. Why have these have come way down? I don't know. I wouldn't be so bullish on this. Just looking at this scenario, this doesn't scream bullishness to me. Of course, they're all over the place, but again, that's commodities. And why have they rallied back up if their EPS is down here? The EPS is the same level it was when the stock was at 37, but the stock's at 63. Okay? That's why I love using these price consensus and EPS surprise charts, because you can see that easy. That's not something I could see here. So we do see a lot of volume there, and it's underneath that, right? Get this comparison out of the way. So it kind of broke through this floor here. This was really the market point of control, 67-ish. So it's broken down below there. Yeah, getting a little bearish. Fibs, give you an idea where this might go. 62s, that's nothing. 59s, right? So pretty bearish chart looking like there. Doesn't look so good for Valero in the short term, right? And they do have a tendency to move. And the last real big chunk of volume here is at that 50% retracement at 59.30, right? So I think if I were a betting man, I'd say that's where the market is trying to pull that bad boy. Maser Robotics, huh? Off and running. Son, what's going on here? Look at that. Nice. Now, I like seeing this. This is one of my favorite things to see, is a series of lower highs that get put in. Boom, boom. All these lower highs, and people start going, oh, all these lower highs. I mean, this thing's going to go down. And then it breaks through that trend line, and it is off to the races. And that's exactly what happened here. Medical instruments and supplies, huh? MZOR. Let's look here. Selling a call spread. Maybe. I don't know. I feel like when I sell call spreads, I don't usually sell an in the money call spread. I usually sell out of the money. Okay. So this is purely technically driven because the EPS is not. This might be setting up for failure unless something just happened recently. Yeah, no, David, that's what I was talking about. A call spread. I don't usually sell an in the money call spread. So that $60 call is still in the money on Valero, right? Because it's trading at 63. Or did I get my numbers wrong? Hang on. Back to Valero. Yeah, 63. That's why it's selling a 60. I just don't do it. Yes, it can be done, but I don't always do this kind of thing, right? I typically I'll sell the at the money call and make that money. I don't sell this one. I just don't do it. It's just me. If I'm going to do that, I'd rather go long the call spread because your payoff is a lot more in that case. Back to this MZOR thing. So this is a perfect opportunity so this is a stock that's a Zacks ranked number 4 sell that has rallied up here. So when you see these huge moves, you're like, is this justified by anything? And if this keeps ticking down, the answer is no, it hasn't been justified. But let's look at the detailed estimates page. Maybe this is just a one-off. Okay, there's a deal. All right, see? And how come the analysts haven't commented on it? This just happened like yesterday? When did the deal happen? News, partner news. Just got a downgrade. Ah, look at this. Why are they getting the downgrade though? Oh, that's not the deal. And no, this is because Intuitive Surgical, guys. Intuitive Surgical did this. So, of course, these guys are going to rally. Right? That's what that is. That's what that is. It's the poor man's Intuitive Surgical. I would have to dig into this a little bit more. But I don't know. I'd have to read up a lot more about this. But just right off the bat, why are they getting downgraded, and why is that EPS moving in a negative direction while the stock's going up? This could be a rope-a-dope, but I'll take a look at this. I'm going to keep this on my list. MZOR. All right, CVI, right? You guys love these energy names, huh? Digging in the energy. CVI. Back to our Zacks rankiness. Let's see what it's got to say. We don't even, this is a tiny company, huh? Maybe that's why I didn't know. This is one of those dividend things. This isn't a royalty trust, is it? No, independent refiner. Okay. Well, I'll tell you what, Zacks doesn't have a stance on it. And when I say Zacks doesn't have a stance, okay, so I want to clarify. There's no Zacks analyst that's sitting there and saying, buy, sell, buy, sell. No, it doesn't happen. We take all the other analysts. We basically copy everybody's work and then run statistical analysis on what everybody else is saying about the stock compared to what everybody else is saying about every other stock in the world. That's essentially what we do. So if we don't have earnings reports for it, we don't have anybody on it, we don't even know. Right? I just don't know. Oh, it's an icon thing. Okay. Well, bet the jockey, right? It's paying 11% dividend. That's pretty dope. So maybe it's something, if you're looking for a dividend, right? But if that was paying that over here and you were here for this slide, I don't know. Hawaiian, yeah, man, these airlines might be fun to play. And Visa, you want an options play? Visa's going to go up. I mean, that's like death, taxes, and credit card companies making money. The three guarantees in life. So Visa, I always kind of find like a bullish thing to do. When are they going to report? Let's look at Visa's report. Oh, they're reporting today. After the close on Visa, they're a buy. What are the potential problems here for Visa, though? Maybe some PayPal stuff. Maybe these emerging technologies. Although they've done okay messing around with these. Do they spike up on earnings a lot? Look at this move. Woo. Nice spike last time. Spike up. Maybe we could sell 87s. Or the 87s. Yeah, I'd look at something like that. Sell something out of the money down there. That's probably a very safe way to go. Selling something out of the money. I think that's decent. All right. No, Regeneron is... No, RG... Wait. REGN, right? Not RGNR, right? REGN. Man, look at, I mean, they just can't get out of this range here. They've been stuck here for a while. We need some sort of impetus to get this thing out of this range. Stuck in the range. Are they reporting too? No. The fourth. So we got a little bit for them. Remind me when this comes around, because maybe we can talk about them. There are three though, but this might be a good maybe a good squeeze on this one. Who knows? But look at that. All of this activity is like they bounce. It's all slowly kind of coming to this. Yes, we're going to agree right here where the fair market value is, right? It's bouncing around. Oh, look at this thing. I love seeing charts like this where it's just kind of like steady increase over here. I, of course, lost all my indicators because I was messing around. Steady sort of increase, just ticking higher. Got a little challenge here at 1189, right? So that's the 52-week highs. Oh, not even 52-week highs. Goes back further than that. So it's creeping up there. I don't know. Maybe they can get out of here. Simulations Plus, SLP. SLP. July 13th. Oh, man. So these guys just reported, huh? Just reported. Posted a profit. Analysts are not moved, though. How come the analysts haven't moved? Let's see if there's some growth here. No volume. 900 shares. These guys are not really on the radar yet. Decent growth numbers, though. So if they can keep up the growth, that could be solid over the long run. I don't know what to do, but we'll figure it out. American Express had good stuff, and MGM. I don't think it's too late. Here's another gaming stock I was looking at, Boyd. So Boyd's been breaking out, right? Win creeping up, right? So, maybe there's still some time for these guys. I don't know what MGM's Macau exposure is, but that's been a big sort of wild card with these guys is Macau. I mean, with these guys, I don't mean MGM. I just mean, in general, the casino stocks. So I'd have to dig in to see what their Macau exposure is like. All right, I like this. We're going to rapid fire here. Chipotle. Maybe we should talk Chipotle next week. Because, remember this madness? Like, oh, the burritos giving people dysentery or whatever the heck it was. Some Oregon Trail stuff. It was like we were all dying from Chipotle burritos. And then it takes a while for these things to kind of trough, right? But that kind of looks like they're digging out of that trough, doesn't it? Let's see what the analysts have done. Have analysts crept up here and started to get brave? See, the analysts still aren't brave here yet, though. I like to see a turnaround in the EPS before I go out and say, yeah, okay, let's jump back into Chipotle, right? So people are jumping the gun here. I think that's a little bit higher risk, but we could talk about Chipotle. We can do we can dig into that, right? Let's dig into that later. So send me an email asking me to do Chipotle. And what else do you guys need? Oh, and Regeneron, maybe. We'll do that too. Acacia. I think Kevin Cook follows these guys. I feel like he's a big Acacia guy. I'll have to check. But 50's held up here pretty decently. There's a good amount of volume in here. We could be at or near this bottom. Very close. Looks like it's bottoming out here on shares of Acacia. So Microchip Tech. I had these guys in. I think I had them in Momentum Trader. And with my luck, I think I bought here or something, and then they just sold off. I know I caught them and I didn't get a move that I wanted, and I was frustrated. I caught the tail end of it somehow. But semis have been good overall. And a lot of that has to do with, just look at the NASDAQ. The NASDAQ just doesn't care what's happening in the rest of the market. They don't care. At the highs, near the highs, going higher. Lots of stuff going on here with the NASDAQ. So I think that a lot of that speaks to what's happening in some semis. Because remember, it's the Internet of Things now. Like, I literally have a coffee pot that I start from my phone. How cool is that, right? Just if you remember to put the stuff in the night before. But Internet of Things, there's a huge demand for chips now. Much larger than it used to be. And chips are in everything, and they'll continue to be. So there's a lot of demand on chips, and that's been helping the whole sector overall. Okay? Well, guys, I think that's all I got for you today. Well, not even today, just for now. And we're going to go ahead and come back in an hour and talk about Skechers, ticker SKX. So we're going to talk about the Sketch. It's going to get sketchy. Watch. Now this is going to blow up probably. Look at this. No? Blow up? No? Working. Okay. So we're going to talk about Skechers. These guys were like the darlings of the market in 2015. And then everybody realized, like, oh, no, you're just another shoe company. And then it came crashing down. Now we're going to see here if this is something that's, is this rebound going to be sustainable here for Checkers or Skechers? Checkers, I'm hungry. For Skechers, or are they gonna stall out? I don't know. That's something that we're going to dig on through. So thank you guys so much for hanging out with me here on our live Good, Bad, and Ugly question and answer session kind of thing. Let me know if you like doing the Good, the Bad, and the Ugly this way. I don't know. Maybe we still need the more concrete one. You just kind of let me know. Shoot me the emails. Let me know what you think. And I will see pretty much everybody, hopefully, for Skechers in about an hour. So you guys have a fantastic day, and I will see you shortly. Have a good one.